Hey, what's up? Tim Reset coming to you with another market analysis. Today is Monday, February 11th, 2013. Let's jump right in with the ES. We have hit our target at 1516s, the very large retracement from back in February of 2011. I'm sorry, May of 2011 up to September of 2011. And so in hitting that target, that gives us the next retracement all the way back down at 14/28. Now, whether or not we pull back, whether or not we go higher before pulling back is yet to be seen, but that will be the next larger line in the sand. So, in terms of major pullbacks that we could see in the coming months or the really for the entire year here of 2013, it's not foreseeable that we'll pull back right away and rip down to that level, but it is something to keep our eye on. If we do start to sell off and things start to get a little bit volatile, if volatility starts to pick up, and again, this is over a multi-month time frame, if we do start to pull back, this would be the level that we'd be looking at from lows to whatever the highs end up being. If we do rip out, meaning if we trade higher and just continue to rip, the negative 61.8 is 1595s. And if we do rip to that level and begin to pull back, our line in the sand would be an extension from highs to highs. So those are our two scenarios, leaning more towards the latter at this point for reasons that I'll get into in a moment. But it's always good to review, scenario A, scenario B, different options that can occur. So let me zoom in and we'll talk a little bit about what we have going on here. So today being Monday, the 50% long that is holding is 1510.50s. The line in the sand, meaning the 61.8, the failure level for tomorrow or overnight, I'll be looking at is 1508.75s. Now the opposing, the short, did fail, and that validates the long. Keep in mind this is that larger weekly target, the 1516.50s. So we are sitting up at highs. So if we do fail 1508.75s, I'll look for the first 15-minute short from highs to whatever the lows end up being as the first short setup in the potential pullback or the potential new trend for tomorrow. That's really all that I'm looking at on the ES as of right now. And again, that was the 15-minute chart here. Moving over to the Euro, also very exciting things going on. We pulled back to the daily 50%, the first from lows to highs at 93s, traded up to its target, the next one in the trend, next low to high, gave us a 33.60s. And if I zoom into the 15-minute chart, I'm going to go to a 20-day, 15-minute. You can see the 33.60s down here at the bottom. We had one, let me get rid of some of these lines. We had one large, well, not so large for a 15-minute, small for a daily. This was a 3-day retracement that traded. Nice, real strong sell-off down to the target, and then we sold off again after that, just down to the daily long. So that's where we're sitting at, the daily long. We did have an extension trade briefly from lows to lows. We had a little bit of a sell-off here, and then we broke that extension short. So what I have drawn now is an extension from this low up here to lows, which is holding. So that's the failure point that I'm using, the negative 61.8, the 61.8 rather, of 34.50s. That's my failure point, and the long down here at 33.60s, I'll pull from lows to whatever, once we break, these highs end up being, and that would be the first larger 15-minute long setup that I'd be looking for. If we do start to rally, I will look for a pullback, or a bounce rather. I'll be interested to see what happens all the way halfway back. And if I can get that on the right anchor point, all the way halfway back short is up at 35.35s. So that would be a level of interest an area that I'll be watching. If we do break the extension short at 34.50s, I'll be looking at 35.35s as kind of the magnet to pull us higher. Now if I zoom in today, I only had one trade today, but it was a good one. I start about 7:30 Central Time, which happens to be right over here. So this morning, pulling from the high to lows, it originally had anchored down here. We didn't make it up into a full retracement. Came down here. If I move my screen down a little bit, this is that daily short below us that we did test earlier and in the overnight session. So keeping in mind that the daily long was below us, we did have a nice little double bottom here, and it's just a matter of if the short trades first, I take the short down into the daily long and then wait for a series to break and take the first long setup on the 512 tick chart. But in this case, since the long setup traded first, we had the double bottom, broke the prior swing high, lows to highs, pulled back. The long traded first, meaning the 33.75s traded before 33.91s. That was the setup that became valid, and then I just trailed the swing lows here up until the 42s, putting my stop just I'm sorry, 34.20s, putting my stop at 18s. So made for a nice little trade this morning. Other than that, by the time that trade was over, it was about 10:30, and I just kind of called it a wrap for the day. So that's the euro. Again, looking for a break to the long side of 34.50s to confirm that daily long. And if we break that daily long, if we break the extension short, then we'll be looking for it to kind of gravitate and drift towards 35.35s and see if we can get a break out of that 61.8 at 35.78. So, as I go throughout the process here on the different time frames, I'm always using that 61.8 as my line in the sand failure point as the potential trend change. Let's talk about a few stocks that we were looking at last week. Let's see. My list here, APO, we had talked about a couple weeks ago, getting long at 51s, stop below the low. And this is a great example where we broke out, we pulled back, and then we broke out again. And on this day here, the 8th, that's the day that validates the movement from your stop underneath the original low to the next swing low. So by breaking out to new highs, that confirms that this on the 4th of February is now the new swing low. So on the 8th is when I moved my stop underneath the low of the 4th. So stop on that one's just about break even. We did have an earnings announcement. Basically what I'll do is into earnings I'll pull half off, just because you never know what can happen in earnings. And so in the meantime, the second half of the position, I have my stop down here at 21.50s. The next one that we had also talked about that had traded, FUL. Now this one triggered today above highs, mentioning at 40.20s, just a penny or two above highs, and stop is below the lows here. So a very nice, clean breakout and a very clear support level, and again strong volume confirming on the rally. So that's another one. And my stop here below the low, entry was just above the highs. We mentioned that one last week on the watch list. Let's see. Next one was THC. This one is just kind of chopping around. We got filled last week. Stop is below the low here. Once we break out to new highs, then I would move my stop from underneath the low on the 29th up underneath the low of the 5th. So you can see that the pattern here of waiting for a break of new highs before moving my stop. ASIC, nope, not VRTS. That's what we had. Now this one's just been screaming higher. Talked about it last week, breaking out of this little 3-day consolidation. If I zoom in a little bit, We had another little, it's pretty much been bull flag over and over again. So same scenario, strong volumes, earnings already reported. We had a nice break to new highs, a little consolidation making for a nice tight range. So you can use a very defined stop underneath the low and entry above the high. And VSR was the other one we had talked about that had this nice little triangle pattern. You can be a little bit aggressive and take it at the break of the triangle, or wait for that high to break. Regardless, I got my stop down here below the low at the 31st at 14.10s. And then the only other one that is on my radar that we didn't talk about yet is TUP, Tupperware. Looking for a breakout of new highs, and then the stop would be below the low. Strong volume, already announced earnings, lower volume on the consolidation, sideways movement. I think you get the idea. For shorts, BVN we had talked about that had been trading, just kind of doing its thing, chugging lower. Really hasn't made any sort of pullback yet. We had a nice little bear flag last week, and then a nice sell-off this week once again. So you can see, as the market today was flat, the stocks that are relatively strong are going to continue to be strong, and stocks that are relatively weak will continue to be weak. When the market is down, the relatively strong stocks shouldn't decline by as much, but the relatively weak stocks should decline by more, and vice versa. When the market is up, the strong stocks are going to do well, and the relatively weak stocks, the shorts that we have, should not rally by as much as the market. DWA was another one we had talked about. Finally triggered today on a break of lows, and on this one I have my stop above the little gap down here. And speaking of gap downs, let me go to Apple because this makes a really good example. So with scenarios where we have gaps like we have here, if you don't really have a defined swing high or swing low, you can use the gap as the entry or the stop placement. So in this case, Apple being a counter trend play, looking for the gap to fill if we were to break highs of this consolidation, then the target would be the close of the gap fill. So looking for a short only if we broke lows, and looking for a long if we broke highs to close the gap. Well, we didn't get a breakdown, we ended up getting a rally, so that's where you can kind of bracket these scenarios like this when you get gap downs, and that gap occurred after earnings, off of earnings. So you can bracket the consolidation and either get long above highs or short below lows. So that's just kind of a side note on Apple. Then the only other short that I have that we didn't talk about yet is PBR. Currently not short this one, but it is on my radar. Again, the gap down here would serve as my stop placement. So if we get a bounce next week, or later this week rather, if we get any sort of bounce and break down to new lows, I would put my stop either above the high of the gap, or if we do make a very clear swing high, you can put the stop above whatever that ends up being. So that that wraps it up for swing trades. I've been working on my Traders Expo presentation for next week. That's all finalized. I'm just going to be rehearsing it this week, and then once that's completed, once I deliver the presentation, I'll post I'll do a full report of the Traders Expo, as well as post a recording of my presentation, and I think I'll be doing, I know I'll be doing another interview as well, and that should be recorded, and I can get that posted on the blog. I also posted a list of documentaries in the dashboard section, thanks to one of my readers, George, sent me that nice list. So instead of posting each individual documentary, I thought I'd just post the list. So that's in there. And I also added the American Public Media Marketplace podcast to the resources page. That's a really informative podcast if you're interested in a little bit more macro view of the markets. So we'll leave it at that for this week. We didn't really talk about the VIX. We can do that quickly. Not a whole lot going on both in the VIX or in the broader market from last week in terms of just sideways movement. But looking for, again, this is just the high of last week and the low of last week. Once the high is breached, that will signal continuation of the trend. Once the low is breached for the week, that would signal a reversal or at least a potential pullback. So we'll leave it at that, and we'll talk to you again next week.